In terms of some things that Fed Chair Jerome Powell said that's sticking out to investors right now, he said that the Fed is, quote, insulated from political pressure, also saying that the Fed has, quote, seen the damage from political influence. He also went on to mention that businesses are losing confidence over trade concerns and that the baseline outlook remains favorable. So joining me now for more on this and to break all of this down is Jeff Kleintop, Chief Global Strategist at Charles Schwab. We're also joined by Ed Stringham, President at the American Institute for Economic Research. And Ed, let me start with you. Markets aren't reacting as favorably as one would expect. The Fed sounding maybe not as dovish as the markets wanted to see. What was your interpretation of what Fed Chair Jerome Powell was just saying?
Well, actually, I was just thinking about this morning, and I kind of predicted it. I think a lot of people were thinking he was going to say exactly what he said. A half year ago, they were talking about raising interest rates towards historically normal levels. They've been talking about changing course on this for quite some time. And that comes up in the so-called dot plots. A lot of people saying, oh, yeah, maybe we're going to lower the interest rates. And that's also showing up in the implied probabilities from future markets. So I think it was fairly predictable. I'm not saying I'm enthused about it, but that's just the way things have been going.
And another thing that's sticking out to me is comments from James Bullard. He was basically saying that a 50 basis point cut right now would be overdone. Now, the market reacting this way because Bullard is the most dovish member of the FOMC right now. What do you think the market reaction should be? And is this a concerning sign for the markets?
I think they're papering.
Jeff, sorry. Jeff, can we get your thoughts on this?
Sure. Look, I think that a 50 basis point rate cut would be a sudden shock. I think markets would be concerned that the Fed's seeing something that we aren't. I mean, Powell just talked about how the consumer looks solid. Financial conditions haven't deteriorated in any material way. Sure, there are concerns over tariffs, but nothing in the way that would invoke a 50 basis point rate cut. And just think what that would do to the banks, which are already feeling challenges here with the yield curve inversion. So, no, I don't think the market would welcome a 50 basis point rate cut, nor do I think it would be effective if economic conditions were deteriorating truly that quickly.
Well, Jeff, at this point, though, we got the weakest consumer confidence number in about 1.5 years, nearly 2 years. Do you think that it is time for the Fed to step in over the next couple of months, not necessarily by a 50-point basis cut reduction, but maybe by 25 basis points?
Leading indicators are clearly headed towards a slowdown with heightened risk of a recession next year. It's not just consumer confidence that's deteriorating. We're seeing that in the manufacturing indices. We're seeing that in the leading indicators from the OECD. From many parts of the global economy, the picture is deteriorating. But I think the market's hope that the Fed can avert all of this with a few rate cuts is misplaced. Look, the Fed cut in September of 2007. That didn't stop the 2008 recession. They cut in January of 2001. That didn't stop the 2001 recession. I'm not so sure why they have so much great faith that the Fed can deter this one.
Do you think the Fed could come in and save the day, or maybe they won't have as big of an impact?
I totally agree with Jeff here, where we've got a situation where the Fed is trying to return to a normal interest rates. Historically, we're still way low. And the idea that they're now going to start reversing course on this, I think it's really trying to paper over some other problems, such as the tariffs, these international trade wars, which are taxes on American corporations. And they're basically, Powell's saying he's not political, but in a certain way, he's actually kind of helping out Trump by saying, look, you've got these problems in the economy, fine, I'll start accommodating them.